Income Tax 2020, Practice Problem 1, Presentation 29, Schedule C Business. We're going to go through the income statement provided to us, we're imagining by the client or for our own Schedule C business, and mark the accounts that may need to be adjusted. Come in, relax with Income Tax 2020. Here we are in our Lacerte tax software. You don't need the Lacerte tax software to follow along. However, I do think they have a 30-day free trial. So if you can get access to a promo version or a demo version of it or any other tax software, it could be a good tool to practice with. We're going to be continuing on with our Schedule C business. So in prior presentations, we did the income information first section. Then we went through the above the line deductions. Then we looked at the itemized deductions. Now we're tacking on a Schedule C, and we're going to be going over to our worksheet we're imagining that was provided by a client or we have for ourselves. And it's basically going to be an income statement because that's what the Schedule C portion is. We don't have a balance sheet for it. We took our income statement and formatted it last time into something that looks like this. So we've got our income, which actually has a negative number because we're imagining it in terms of debits and credits, which would be a credit. So that could throw some people off, but that's how I'm going to format it because that's what I'm used to. And then we got all the debits here, which are going to be the expenses. And then we got our net income of the $57,891. Now, once we have this, oftentimes the reaction is that we're just going to take this and just throw it right into the tax return and that'll be it. But we probably want to think about it a little bit before we do that. We may not be able to answer all of our questions before we start the data input, but we probably want to have an idea of possibly some accounts that may need adjustment. So the first thing I would do, whether we have it in Excel or whether we have it on just a hard copy paper, then I'd go through it and just say, are there any of these accounts that look funny, look like we might need to do something? Maybe look at the prior year and see what we did last year if we had any adjustments to it, so that we can kind of visualize what we're going to be doing this year. So if I just go through these expense accounts, I'm going to say, all right, here's the expenses that we have. Advertising, probably pretty straightforward. Automobile, that's one for sure that there could be issues with, right? Because they might use the mileage method. They might be using actual expenses. If they are, there could be depreciation related to it. There could be personal use and business use for it. So I would also check last year and see if we made an adjustment. Did they use the mileage method last year and all that kind of stuff? So then bank charges, hopefully it's pretty straightforward, although it could be business and personal depending on how good they are at separating their business and personal. Computer and internet expenses, that's another one where you might say, well, are they separating out the business and personal? I'm going to assume that's okay, right? But you know, that might be something that would go under a home office or something like that. Dues and subscriptions, again, I'm assuming that they're okay on that one, that they're picking up dues and subscriptions that are related to the business and not personal. So, and then the general liability insurance, the fact that it's liability insurance here would make me think that it's for the business because it's specific to liability. If it was like auto insurance, then I'd be saying, well, does that maybe go up here? Is it going to be part of the mileage method? If it was, you know, some other kind of insurance, it might be a question. If it's health insurance, then the question is, well, do you get to deduct a health insurance on the Schedule C? Do you have health insurance through your work somehow? If you have a W-2 income, and if you do deduct the health insurance, it's not going to be on the Schedule C. If it's related to the business, it's going to be on the above the line deduction. So health insurance would definitely be one that you would flag if that were here. And then we got the meals and entertainment. Now this is always one that we typically may have to break out between like 50%, 50-50. So we may have an adjustment on that. And then of course there's always a question as to, are there personal meals involved here? Have they followed the rules? I mean, do we have meals that are actually business related that qualify for an expense under meals and entertainment? Supplies should be fairly straightforward, you would think. And then repairs and maintenance. Now, repairs and maintenance, what are they repairing? If this is going to be like if they rent an office and they're talking repairs and maintenance on the office, then it would be fairly straightforward, although some of it might be capitalized. And you might, if it's large repairs, you might have to capitalize it and depreciate it. But if they have a home office, then the question is, all right, are these repairs on the office or maybe they're on the home and I got to do like a business use of the home kind of calculation to break that out? Same with the telephone. Question is, well, are you talking about like the phone that you use for business and personal that we might have to break out between like business and personal? Is it like a landline that's on the phone, on the home? Utilities, same thing. If you got a separate office, then that's just for business related, that's not connected to the home, then you would think all utilities for that office would be related to the business. But if they're using the home office, then the question is, all right, well, these utilities, do I have to break out a business use of the home kind of thing? So I'll typically flag those things off there and compare it to what we did last year. Now, these type of questions, once we have these, we'll typically say, well, that might stop us from moving forward because we're going to have to ask the question. But again, what we don't want to do is ask, stop all the time. We don't want to have a stop and go in our data input, because what that does is it leads to a back and forth with the client that may not be necessary if we can push forward to as far as we can go and then ask all the questions at one time. We don't want to annoy the client by every time something that, bothers us, we have a question, if we ask them, So I'm going to still go forward and try to do the data input with what we have here and then put everything together and make as best the estimates we can, and then ask the client based on the information we have here and basically what we did last year. So I might put in my open items here then, the Schedule C. I might have a Schedule C auto expense. And I might note here, we used mileage method last year. Should we do same this year? Or something like that. Business use of home, so home office, right? And our utilities. What do we have? Utilities and repairs and maintenance on the home that we need to break out between business and personal. Looks like this is what we did last year, right? I'm going to base this on last year. I'm going to kind of push forward and base this information on last year, as much as possible, imagining I have last year's stuff in front of me. But what I'm going to do now then is next time I'm going to push forward and enter it in as is, and then I'm going to go ahead and basically ask the client those questions. Or I might make some predictions about the home office if I know them pretty well, make the prediction about the home office and then go forward. So I'll do it in a two-step process. We'll enter it in first, just as is, and then I'll note the adjustments, and I'll make those adjustments basically one at a time, marking them in our Excel worksheet so that we can review it in the case of an audit and in the tax software as we go.